What's going on, boys? How you doing? Ricky, Stevo, Gravinder, Gravesh, Guggan, G Money. It's Josh. What's going on? Welcome. Let's go over a couple of things here. A lot of stuff that happened today. We are having this little relief rally here. If you guys don't know yet, this is phase two of the bear market, which usually means the drops come a little bit faster during this phase. This is why. What's up, ad? Okay. Um, which is why I'm not too scared to take out farther out puts on this rally. I'm gonna wait. Maybe we get another day up, but right now what I'm looking at is the 50-day moving average on SPY. It's right at 401.65. We got up to 486, so we missed it by about 80 cents today. The 50-day moving average. What's up, Andrew? How you doing? So we have the 50-day moving average at 401.65. Missed it by 80 cents today. Do the levels have to be perfect? No, we learned that plenty of times before, guys, especially with me. I waited for ideal entries a couple of times the last 2 weeks, and I completely missed the trade. What's up, KB? So I have no problem entering a little bit early. If they do want to rip this up a little bit more, maybe tomorrow we get over the 50-day, but I doubt we close over the 50-day on this rally. The reason being, since I said it is phase two of the bear market, which means the drops usually come quicker. So what I'm waiting for here is maybe if we get a gap up tomorrow open and we touch that 50-day moving average, I think we can reverse hard tomorrow. And there's a couple of reasons why. I'm not just guessing here. What's up, Carlos? How you doing? So one of the reasons being why I think we're going to reject at the 50-day moving average this time is what bonds did today. Bonds were absolutely bidless at the end of the day. They're just straight down. I know my chart is a little bit inverted here, so you can't see exactly. But look at the sell volume that came into UB right before close. Big volume, closed at the low of the day. Look at the daily here. It can't even get above the 8-day moving average. As you guys know, bonds are usually where traders run to when they're scared of equities. This year, they've been very correlated. Whenever UB is down, usually NASDAQ is down the same time or right after it. So one thing you have to pay attention to is this UB, which is bonds. It's like the most clear technical pattern I've ever seen. Look at this clear bear flag. Once it broke down, consolidated a little bit, straight down more, retested that previous breakdown, and straight down some more. And now it's retesting that previous low on the bear market. And look how the candle closed. We wicked above and closed below near the low of the day. That's a very bearish pattern on bonds today. And usually it catches up with stocks, whether it be tomorrow, whether it be Monday. Usually tech catches up to bonds, this bond in particular, UB. IWM here, same kind of scenario, guys. We got the 200-day still coming straight down. I know a lot of people turned bullish here when I said I was taking October puts. A lot of people thought I was crazy. But you guys see what happened, and most of those people disappeared from the chat. And now, after this big dump, we have a 2-day bounce. Does it look familiar? And we're going, and this time we have a hard resistance, which is a 50-day moving average. So I'm going to show you guys something here on this pattern, this little channel I have drawn here. This is a daily channel all the way from January. We tested it in March. When we tested it in August, we had a false little breakthrough. I wanted to go touch that 200-day moving average. Andrew, I'm not in TLT. I think that was Ricky's trade maybe. I'm not long anything right now except for TELL, T-E-L-L. Go over that one as well. So this one, as you guys see here, very clear channel from January. We broke out in August, got a lot of people stuck in bullish positions here, rejected the 200-day hard. And when we came down, one thing to note here, as we're coming down, we're mostly just flushing. Like we went straight from 202, so 201.99, we went straight down to 190, so a straight $12 drop, and then we bounced from 190 up to 195, so 12-point drop, 5-point relief rally, and then we dropped straight from 195 all the way down to 177. So that's quicker drop. That's what I mean by phase two of a bear market, where the drops come much quicker. If you guys want to look at it, go look at 2000.com crash, go look at great financial crisis. Phase two of bear markets usually fall faster and harder. So what's happening here is we had a 195 to 177 drop. That's a 22-point drop straight in a line. And now we have bounced from 177 up to 184 almost. So I'm going to say that's I can't do math at the end of the day, but that's a 7-point raise. Last time we got a 5 point bounce, this time we got a 7 point bounce, plus we have that top of the channel still in play. And we have the 50-day moving average right here on IWM, which is at 184.16. So that's where I expect it to reject. Let's just write 184, you guys know. 184 is where I'm expecting it to reject. Do I think we may not get the exact number? It's very possible. It has happened a lot of times. I got October puts. It can rip another day. It can rip another 2 days. I know where this thing is going. In my mind, I have conviction in my trades, as I always do. AMD and T. Yeah, I'm doing chips in a bit. KB, just hold on. Hold your horses. And then 184 matches up right with that top of the channel I just showed you. So that's going to be a very hard inflection point. If we get through that, then we can possibly rip up to 187. But it's a very hard resistance, and I do expect downside soon. There's really nothing changed in the news, nothing changed in the macro. Everything's exactly the same. Same thing we have here on VIX here. We have the daily 50-day moving average right underneath. We actually closed right on or right under it. 2380, we closed at 2362. So we closed just below the 50-day moving average. Let's see if this one wants to pop off the 50-day as it has before in the past, as we've seen. And if it does not, then we have a little bit more downside here on the VIX. And the only thing that's even making me think we cruise up a little bit more is that September 16th OPEX. There's a lot of open put interest. Maybe they hold this market up until then. Maybe they don't. Let's see what happens. But I have no fear in October puts right now. Here is QQQ. Same thing. I got a bunch of resistance up here in the 304s, 305 area. Same thing. 50-day moving average is right now sitting at 306. So 200 days still rolling downwards. This is still downward momentum. I know a lot of people want to get long. They want the bottom to be in. It's easier that way. You just buy stocks and hold. But I don't believe it is. I think there's a lot more macro stuff that's about to come out very soon. And we rejected the 8-day moving average again today. 395 is the 8-day moving average. We closed below it again. Tech was noticeably weak today. If you guys didn't see, Apple actually closed red on a doji. It was weak all day. SPY was going straight up. Apple was just sideways and down, sideways and down. And same thing with other big tech. Amazon was a little bit better. We did close near the high of the day. Google as well. I think Apple may have been, yeah, Google's weak as well. Meta, what did that one do? That one's weak. Microsoft has to be weak without even looking. Yep. Microsoft, another little doji candle here, a little bit stronger than Apple, but still nothing significant here on the daily chart, guys. Microsoft hasn't closed a daily candle above the 8-day moving average since August 18th. That was the end of the last rally, and that is probably the weakest I've seen Microsoft. And if Microsoft can't go up, then what's the rest of the market going to do, right? Apple below the 50-day. We got the 8-day crossing below the 50-day. That's also another bearish indicator. 8-day already crossed under the 21-day. That's already saying we're in downward momentum. And one other thing I want to show you is this little seasonal chart. I know I've sent it in my stock life a lot of times. We are currently sitting either at this peak right here. If you guys see my mouse, I don't know if you guys see my mouse. Or we're sitting at this peak right here. So either way, I believe a pullback is coming soon. It's either September 16th, they'll hold out till then, or they'll wait till that's done, or they'll just start dumping it right now. I have no idea. That's why I have no problem taking October puts again. Today I did open 3 positions. Other than that, it was a small day for me. I traded some small futures. I hit 1, missed 2, no big deal. That one was actually red on the day, but the huge day I had yesterday, it doesn't even matter. JPM here was the first one I added. So we're going to scroll back on JPM here. The reason I added, first of all, is the 119 level. We are very, very close to 119. You guys know how much I love this level. If you're in MSL, I've traded puts off 119 so many times. And the reason being, it's the 2018 highs. This is a huge weekly level. You guys see it test like 3 or 4 weeks here, 3 or 4 weeks here, 3 or 4 weeks here. This level's probably been tested on the weekly like 10, 11 times, right? And we're right back there again, right here. So August, as you guys know, went a little bit further. The bear market rally went a little bit further than imagined. And we have a resistance up there as well, 123. But for right now, it just looks like we're just doing a little bit of a relief job right now because the RSIs were so beat up on all the 4-hour, 8 hours, everything. As you guys see here, 119 rejected here. We got through it in that August rally. That's what I was saying. It was an abnormal bear market rally. They go farther than most people think. After that, we got a relief bounce to 119 right here. Next day, we actually overcut it, went to 120, and then straight down and closed below the 50-day moving average. And now we're just kind of sideways, and now we're testing that same level again. So good risk reward here, 119 level. If the weekly closes above 119, then we're wrong. The bear market rally can keep going possibly. So it all depends on tomorrow. If we close under 119 on JPM, I think we got the best entry. And same thing on AMD. AMD, we nailed these puts for over 300% last time. I have no doubt semiconductors will be one of the weaker sectors if we do flush the market overall. Semiconductors, I do believe, will be one of the weakest sectors. AMD, again, rejecting the 8-day moving average again, hasn't been able to close above it since August 25th, that rally. And since then, we've just been in a downtrend. We're just kind of relief bouncing. If you guys look at the 4-hour charts, I have shown you guys this. 4-hour charts, historically, when they get this low, they usually bounce. That was based on SPY. So SPY 4-hour chart was way oversold, and now look at it. We got our relief bounce. How far does it go? As you guys see here, 4-hour relief bounce here. We only got to about 55 RSI. Right now, we are sitting at about 55 RSI. Back here in August, obviously, was the exception. They took it way further than anyone expected. Sometimes that happens in a bear market, but usually it's just a small little relief rally just to cool off the RSIs on the smaller term time frames, and then they continue the real move. So JPM we went over, AMD we went over, and my third one was obviously IWM here. Another thing I want to show you on IWM, why I took it today instead of waiting till tomorrow. You can go into this. This one has the 100-day moving average as well. So we have the yellow line, which is the 100-day moving average. No, wait. The red line is the 100-day moving average. The yellow line is the 50-day moving average. And right now, we're just sitting right in between these two right here. So we have the 100-day moving average at 182.87, and we have the 50-day at 184.16. So right now, they can take it up to the 50, they can reverse it, or they can take it down tomorrow and close it below the 100-day tomorrow as well. Let's see what happens tomorrow. Right now, I have no problem taking puts. Further out, obviously, if you're playing for tomorrow or next week, then I don't know if this is the best risk reward area for you. But since they're October, we have the opportunity to add, reduce with profits. We can do a lot of stuff with a position if it's more than a month out, right? So we have time on these. I have no worry about them. And even if you look at the weekly 8-day moving average is right in between as well, which is at 185.75. Any close below that tomorrow, I think will be absolutely fine on the IWM puts as well. Other than that, so I went over my analysis. That's pretty much it. I'm just following the seasonal chart. Been following it all year. You guys see in August, we made new highs. Not new highs, but like we broke a bunch of resistances and got everyone tricked back in. I'm watching this red line, by the way. We dumped into September as expected, got those 300% on those puts. I did sell a little bit early on AMD. I could have got like 500, 600% easily, and my other puts as well. But we had that little bounce coming at the beginning of September, which is what scared me out of my puts. Maybe this is it. Maybe we already had a little 1-2 day bounce, and now we're wondering, is it this peak or is it this peak, or are we just about to form one of these peaks? Either way, I think a pullback is coming soon. Whether it's the first one, whether it's the second one, I think very soon we'll get a pullback. And if not, you guys see the seasonal into the end of October here, which is probably going to happen all year. This has been on point, and I'll continue following it. And that's why I keep saying October new lows. I seen this chart after I gave that prediction, but it just aligns with my theory. Other than that, I hope you guys had a good day.